everybody. Welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and you guessed it, here's 3 important things to pay attention to for the upcoming trading week. Now, at the tail end of last week, we saw a lot of volatility, particularly on Wednesday, Thursday, and Friday, making for a very choppy week. A lot of that driven by some bad economic data. We had our consumer price index numbers coming out higher than expected, taking the year-over-year change from 3.6 to 3.7%. It has a lot of people wondering if that's going to impact the Fed's decision in the upcoming trading week. So let's start things off with our earnings calendar. I know we'll start it off light, and then we'll dive into some of the heavier stuff that's coming up later on in the week. So your earnings calendar has 265 companies reporting this week. On Monday, you've got nothing. On Tuesday, you do have AutoZone reporting earnings. On Wednesday, we've got FedEx, General Mills, and KB Home. So home builders might become center stage here as the next couple weeks have some more home builders in it. And then on Thursday, you've got DRI. No, that's not the punk band from the 80s. That's Darden Restaurants. You know, you might know them from the owners of Olive Garden, Longhorn Steakhouse, Capitol Grill, Yard House, Ruth Chris. They've got a whole bunch of different restaurants around the United States. And then you also have FactSet Research at FDS. And that, my friends, is it for your earnings calendar. No major names there, but maybe a couple that might be in your portfolio. We've got a couple weeks before we get to the real heavy earnings season stuff. Anyway. All right, so now let's shift focus. Given the data that happened last week with the consumer price index on Wednesday that was higher than expected, you also had your PPI numbers come out on Thursday, which was higher than expected. A lot of people right now are speculating on what the Fed may do. Now, as you may know, we do have a Fed announcement coming up this week. That's going to happen Wednesday at 2 p.m. Eastern Time, where Jerome Powell will go through all the analysis from his peers and come up with a decision as to what the Fed is going to do with regards to rates going forward. And here are our expectations. If you look at this chart here, you can see that it's been extremely aggressive since 2022. Now, we are currently sitting at 5.5%. Right now, the expectation is, drum roll please, that we're going to stay right at 5.5%. There's about a 96% probability as of the recording of this that that's where we're going to stay. However, again, that inflation data was higher than expected, and Jerome Powell has been adamant that he would much rather be more aggressive in fighting inflation than have inflation all of a sudden rear its head again and cause more problems. So, could they raise? Could they raise 25 basis points? The answer is yes. We saw Central Bank do it this week where the expectations were they were going to stay at 5.25%, and they came out at 5.5%. So there is that possibility. Now, we don't know which way it's going to go. All I can tell you is it's safer for you to back away from your trading on Wednesday at 2 p.m. Eastern Time because the volatility will be astronomical. And typically what happens during those announcements is you get big whipsaws where it shoots one direction and then rips the other direction. It's a nightmare from a risk management perspective. Remember, our job is to be a risk manager. So when you have an extremely volatile situation that is almost guaranteed to have a lot of volatility, probably best to stay away because we just don't know with any certainty which way that market is going to move during that announcement. Now, I'll add one little extra piece here. That announcement is supposed to happen at 2 p.m. Eastern Time. However, 30 minutes after that is when the real fireworks begin, and that's where he has his press conference and addresses the media and says, here's what we're thinking on all these different questions you guys have asked me. That is where the real excitement happens. So be careful on Wednesday. Now, we're not done yet. I'm going to shift focus here to something we don't talk about too often, and that is digital assets and cryptocurrency. I know some of you going, oh, boo hiss, boo hiss. Well, there's some interesting things happening, and let me set the stage here just so you understand the basics of it. FTX, one of the largest crypto exchange, or was one of the largest crypto exchanges out there, has billions of dollars worth of assets, worth of digital assets, and Ethereum and Bitcoin and Solana and Litecoin and all these other cryptos. They have billions of dollars worth. And it's been locked up because they've been in a bankruptcy proceeding. Well, last Wednesday, a judge said that FTX could start selling their holdings in order to pay creditors. Now, that may not seem like a big announcement to those that don't know about crypto, but given the size of the accounts that FTX has, this could create massive waves in the cryptocurrency and digital asset market. So let me show you a clear example of why I'm concerned with this one and why I think you should be as well if you're involved with crypto. So here's a table of FTX's holdings. You can see we've got asset on the left and the quantity on the right-hand side. Their largest holding right now is an asset called Solana. I actually own Solana as well. They have $1.162 billion worth of Solana tokens that if somebody decided to start selling those ones, could create massive downside moves for Solana. So I encourage everyone to be very, very careful here. If you are in liquid positions, it might be safer to go into cash just for a little bit here until we see what FTX does. Now, that's not the end of it. They also have $560 million worth of Bitcoin, $192 million worth of Ethereum, $137 million worth of Aptos, $120 million worth of Tether, and that's a stable coin. If they start unloading that much Tether all at once, that could actually depeg Tether, and that creates a lot more problems for the crypto markets. And finally, Ripple, $119 million worth of Ripple. As you can see here, we've got over $2 billion worth of cryptocurrency assets that could be unloaded on this market at any time. So for all you crypto fans out there, know there's this dark cloud looming, which is FTX. Now, let's be honest, if FTX is looking to unload those positions, a smart trader would never just hit the market, sell, and dump it all at once. That would be absolutely catastrophic from a capital preservation perspective. Most likely what you will see over the coming weeks will be a slow liquidation of these assets to not impact the markets as dramatically, but you just never know what the intent of the exchange or the bankruptcy court is. Just know that the green light has been given to FTX to now sell their crypto holdings to pay for creditors, and that could be a big influence on our crypto markets going forward. That, my friends, is your Monday Morning Must-Knows. We'll see you next week.